What happens when your cost of living goes up, but your tax bracket goes up even faster? In 2027, Social Security recipients are about to see a 3.6% boost to their benefits. That is a real increase, and it is welcome news. But here is the trap nobody talks about. That extra income is not tax-free. When your Social Security check grows by that 3.6%, the IRS does not just look at the new money. It looks at your total income, including your new benefit, and recalculates your tax liability from scratch. This is called bracket creep, and it is a silent tax bomb waiting to go off for millions of retirees. Let me give you a simple example. Say you are currently paying 12% in federal income tax on your Social Security benefits. That number is based on your 2026 income. Now, imagine the 2027 COLA kicks in. Your benefits go up by 3.6%. Because your total taxable income rises, the percentage of that income that gets taxed does not stay at 12%. It could jump to 15% or even 20%. That means the government is effectively taking back more than the 3.6% increase. You get a raise, but your net gain is smaller than it looks. The math works like this. If your benefit was $2,000 a month and it grows to $2,100, that seems like a $72 win. But if your effective tax rate on that benefit climbs by 3 percentage points, you are now paying an extra $624 a year. That wipes out most of your raise. This is not a new rule. The tax brackets themselves have not changed. The mechanism is always the same. Your income goes up, your tax rate on that income goes up, and the gap between gross and net pay shrinks. But here's the thing. This is happening right now for millions of people, and most of them did not see it coming. The 3.6% COLA is the biggest one in years, and it is hitting people who have been sitting in lower brackets for a long time. You might be wondering why this matters if you are not on Social Security yet. Well, the same logic applies to anyone with a raise, a bonus, or a windfall. Think about that $42,000 bonus story. People got excited about the money, only to find out the tax bite was huge. The lesson is simple. When your income rises, your tax rate almost always rises with it. There is no exception to this rule unless your total income stays flat. So what can you do? Do not ignore the COLA. Instead, plan for a higher tax bill. If you know a 3.6% boost is coming, you can set aside that extra cash before the check hits your account. Treat it like a prepayment, not a bonus. Or, you can look at how you structure your income. If you have a mix of earnings, shifting some income into a lower tax vehicle could help. But that is a deeper conversation for another video. For now, the takeaway is clear. A 3.6% cost of living adjustment sounds great. But if your tax rate climbs just 3 percentage points, your real gain is almost zero. Watch your numbers before the new year hits. The tax bomb is real, and it is ticking closer than you think.